Now on this video, I want to share with you, if I was a beginner, how I would invest my first 10,000 into the stock market. Because let's face it, a lot of the investors, when they start their investing journey, or some of the things that they struggle with is obviously, what do they buy? How do they diversify their portfolio? Which on this video today, I want to give you how you can start or go about diversifying your portfolio, taking it to the next level. Because as a beginner, you don't want to be risking your money that much, because obviously you might still not know how the stock market works, and therefore the first thing that you can do for yourself is to diversify your portfolio. I did say in one of the previous videos to say that I'm quite aggressive based on my experience, or based on the knowledge that I have on the stock market. I don't buy ETFs that much, but rather I buy individual companies, because I now understand how the markets work and how to analyze different companies from different industry. But you as an investor, you don't want to start by doing that, because it will lead into discouragement when the shares that you bought are dropping. It needs you to have some experience to know where to put this money where, or how to easily diversify your portfolio. Now, you'll remember that on one of the previous videos, as I said, for a beginner investor, it's important that you start by investing on exchange traded funds. So if on that 10,000, if I was a beginner, what I was going to do was I was going to take 60% of that money and put it on exchange traded funds. This can be your S&P 500 ETFs, which you can find them local. I think Signia, and there are quite a number of guys that are also giving you the exposure to S&P 500, which tracks the top 500 companies in the US. Then you can also buy the top 40, right? These are some of the places where 60% of your money should be going there, because an exchange traded fund is, of course, a basket of shares. You are not just buying one company, but you are buying a little bit of the 500 companies in the US. You are buying a little bit of the top 40 companies in SA, which it is the best and safest way to diversify your portfolio. And this, as a beginner, this is what I would be doing, or this is how I would be investing on my portfolio. 60% of my money, which is 6,000, of that 10,000, it is going to go to exchange traded funds. 25% of that total, obviously 10,000, it's gonna go on growth stocks. Now, growth stocks are basically stocks which are in the industries which are expected to boom. These are the stocks that, when it comes to returns, if they are doing well, they will give you tons and tons of returns. They can double your money, triple your money, or even grow your money even 5x or 10x, depending on the growth that we see on that, or you are seeing on that specific company. So 25%, if I was starting, I would go and put money onto growth stocks. And growth stocks, you know that locally in SA, we don't have much of growth stocks. In fact, I will still need to check, because me personally, when I talk about growth stocks, it's AI, chips, EV, and data analytics. These are some of the industries which are still expected to boom in the future, and therefore these are the stocks that I will make sure that I have in my portfolio. I mean, chips industry, or semiconductor industry, Nvidia, AMD, Intel. These are some of the biggest chip producers or chip makers globally, and I would have a few of those, or one of those, in my portfolio, because I know they are not gonna go anywhere anytime soon, because the technology that you are seeing right now in the world starts from coming from those chips which they are making, that helps in designing this technology, that helps in making people enjoy some of the latest technology products. They are coming from these chips which are being developed by some of these chip maker companies. So I will have that. I will have the EV companies and all the other data analytics companies in my portfolio, so that I get ready for my also portfolio, or my overall stock market portfolio, to obviously grow at a much faster pace than a normal ETF or index would, right? Now, the third thing, the last amount of money, this is 15% of the total 10,000 which we started with. This one, now I'm gonna talk it to value stocks. Now, value stocks, what are value stocks? Value stocks are the companies that growth-wise in the it's not expected, or their industries in these companies are not expected to grow that much, which is why you would see them doing what? Paying us dividend. So value stocks are stocks that would usually pay you for dividend out of the profits which they made, because there's not much growth they can do. What are example of some of the growth stocks that you can talk about? We can talk about Coca-Cola. We can talk about retail store companies, ShopRite, Pick and Pay. These are companies that are value companies, right? Or value stocks. But you have to take into cognizance that personally what I do, I buy stocks or value stocks that pay dividends. Their dividends should be good. Which in that case, you'll know that in my portfolio I said I have got ShopRite, I have got Sun International. These two companies pay me some good dividends. And there are also local traditional bank, ABSA, Nedbank and Standard Bank. They are also listed. Capitec, they are listed and they pay good dividends. And these last 15%, I would obviously put it to value stocks. But remember one thing, you remember the 60% you put on ETFs? Those ETFs, some of the companies that pay out dividends, when they pay out dividends, you are going to also receive a small portion based on what you own there. So you will still get some dividends for the fact that you own that exchange, those ETFs, S&P 500, top 40. When some of those companies in the top 40, those companies in the S&P 500 pay dividend, that you are going to get a portion of something. So yeah, that is how it will work out for you. But ideally, you need to have some of the dividend stocks in your portfolio. I mean, I have done a video, I think 2 weeks, showing you the kind of companies that will pay you dividends every month, all day. Every month they will be paying dividends, and these are US stocks companies. I have spoken about some of the companies that are paying dividends or that are paying dividends right now in January in SA, and their last trading day where you can go and buy and qualify for those dividends. We have spoken about that. But yeah, otherwise this is how I would invest my first 10,000 in the stock market. So as an investor, it's very, very important, because you won't know much. You put a chunk of your money into ETF, exchange traded funds, that track the top 500 companies in the US, that would track a quite number of companies in the stock exchange, which is something that is always a good way to diversify your portfolio. So yeah, man, tell me what you think about this. I thought I come and give you this video. This is how I would invest my first 10,000 in the stock market. What do you think? If I were to start again, this is how I would structure my portfolio. But now, because I have accumulated some experience along the way, I can go for individual stocks, because I know how to evaluate, I know what to look for, I know what affects stocks outside of the company. You remember that there are economic conditions that can hurt you, the stock that you own, regardless if whether that stock is doing well in terms of the revenue they're generating or not. If the economy is not performing well, GDP figures are not coming all right, inflation is too high, interest rates are too high, then that is not a good place where you see stocks flourishing or going up. And therefore you need to have that at the back of your mind, and it comes with experience, where you need to make sure that as you are starting this investing journey, based off what you are investing in, you learn some of these things, you monitor some of these stocks, you monitor the exchange traded funds, and you will absolutely for sure make money in the stock market. S&P 500, you will notice that if you are to go and check the history 5 years ago, 10 years ago, or even for the longest period, the graph is always rising, which is why it's always good to invest into a basket of companies rather than going for individual stocks, unless if you know what you're doing. So yeah, man, that's all from me. I wish you nothing but the best in your stock market investing journey. Do your own due diligence. Don't forget to like, subscribe, and hit the notification bell. This video was just an entertainment video, and yeah, if you seek professional financial advice, you need to go and consult the professionals. I'll see you in my next video, and God bless you all.